Hey Siri.
All right, hello everyone. Happy Monday, and welcome to our weekly market check-in with myself, Greta Wall. I'm your host, and I'm joined by Derrick Oldensmith. Derrick is a professional prop trader with T3 Trading Group and the leader of T3 Live's Pro Desk virtual trading floor. Derrick, happy Monday. How's your beginning of the week going so far?
Happy Monday, Greta. It's good to be back. Things are going well. You know, we had OPEX on Friday, and it seems like immediately after here on this Monday that the market is trading pretty fast and loose, which is what we like. Big movements today, up in the Qs, down in the Qs, and a big bounce. IWM's been really weak all day. TLT is getting smoked, so interest rates are higher. So a lot of action going on for a Monday in front of a really big earnings season, considering that there's no real new news or major earnings reports that came out today.
All right, so as I mentioned, Derrick is a professional prop trader with T3 Trading Group. So here's a look at the current positions he is holding as the time of this stream. So, anything we talk about, this is what Derrick's in and trading. All right, so Derrick, it is Tesla earnings week. That is the big number that's coming up this week on Wednesday after the market closed. So I thought we would discuss that and some of the other earnings and things that you're monitoring yourself. So let's start with Tesla. When it comes to Tesla, what are you looking at for this earnings report after, we got the re-robot event 2 weeks ago now. We had some disappointing delivery numbers 2 weeks before that. What is the mood around Tesla heading into this week's earnings report now?
Sure. So it'll be interesting to see how Tesla trades on this report. I think that this daily chart in Tesla is starting to look horrendous. I've been short for a while. I'm still short right now, but I'm smaller at this point. We gapped down huge on October 11th.
Do you want to share your screen real quick so we can see your chart?
Let me set that up. Present.
All right, it's up.
Yeah, so Tesla got bought up really big in front of those events. It got hit down very hard initially on the 2nd because they disappointed on some of their car sales numbers, and then it got hit down in a huge way on the 11th off of the robotaxi event. Since then, it's done a great job just going sideways, which I would argue is bearish. It's had plenty of opportunity to be able to snap back and fill some of this gap. It has not been able to do so. Even on days when the broader market has been strong, Tesla's been unable to participate. Now this ADMA is catching up. So the technicals here look really bad. Obviously, the thing that can change technicals very, very quickly is an earnings report. So if that earnings report has a lot of great surprises in it, then a weak-looking technical picture could become very bullish very quickly, or this could become even significantly worse looking pretty quickly. So we'll see what happens on the report. And, having a thought process into an earnings report is always a little bit of a gamble. I probably will keep some short into the report just because of how in the money I am on my position. But the way that I'm viewing Tesla right now, more from a qualitative fundamental perspective, and again, it's just more of a thesis than anything, it has to be confirmed by the price action, is Tesla is still a really expensive stock from a fundamental basis when you compare it to any major car company that's out there, Toyota, General Motors, Ford. It's extremely, extremely expensive. And the argument behind that, the reason why it should be extremely expensive, is because Tesla's not a car company, it's an AI company. Tesla's not a car company, it's a robotics company. But then when you look at this robotaxi event that just happened, and Elon can't even give an appropriate time frame for when that's going to be online, and now I don't know if it's confirmed or if it's rumors, but there's been a lot of chatter that those pretty cool looking robots were actually being there was like a human being hiding in the bushes basically behind it, making sure that they were able to respond properly and act properly, and that they weren't actually fully automated robots at all to begin with. So if I'm looking at a company that is trading at an extremely high valuation because it's a growth company, because it's actually an AI company and a robotics company and not a car company, then you got to do a little bit better than that event that they had a bit over a week ago. So I don't like the company. I don't like the price. I don't like the valuation. I don't like the technicals. I really don't like anything about Tesla right now. But I won't be stubborn either if it's a good report and the stock breaks up, because we know that this company, of all companies, has a reputation for absolutely destroying short sellers when that upside momentum comes in. So my thought process is very bearish on this. I've been short. I've done well on that short for like a while now, and we'll see what happens with the earnings report. But I also think that the Tesla earnings report is kind of a distraction, in the same way that the Netflix earnings report's a little bit of a distraction, because Netflix is not really involved with the AI story, which is, I think, the most important thing right now when it comes to the NASDAQ. There's not really a read through, I don't think, on either like Netflix earnings that we just had or on the upcoming Tesla earnings on NVIDIA, Amazon, Microsoft, Apple, the AI story, where I think it's more important.
Benjamin from YouTube said he's interested to hear your thoughts on any potential sympathy plays on Tesla earnings.
I think Tesla trades a little bit in its own kind of world. I mean, obviously you have some of these other electronic car companies. You can look at a Rivian, you can look at a Lucid. Lucid just got smoked a couple trading sessions ago because they announced, I think, a secondary offering to raise a lot more capital, which further dilutes the float. So these companies are already struggling. But when you look at like a Lucid or a Rivian, I think it's more of a play on whether or not these companies go bankrupt or actually are able to survive and become something, which I think is very different than the Tesla play. While I think that Tesla is very overvalued, I don't think it's a zero either. Whereas when you look at Rivian and Lucid, I don't know when it's expected for these companies to be able to become profitable. 5 years from now, 10 years from now, and are they going to be able to continue to afford to operate while losing money for long enough for those companies to become sustainable? So I think that they're just kind of very different plays, and I think that Tesla trades just honestly in a universe of its own. Doesn't necessarily trade with the Qs. Sometimes it trades with growth stocks. Sometimes it trades with the Mag 7 stocks. Sometimes it trades with the Qs. Sometimes it doesn't trade with any of those things. It's definitely a little bit of a stock in its own world. So I'm not sure if there's a great read through on a secondary play off the Tesla report.
All right.
Question.
Tesla is the kind of the big name of the week reporting. We get some more Mag 7 names next week. But what other earnings reports are you focused on as a trader this week?
I'm more focused big picture on this market right now than anything as we see these earnings reports hit. I think that this is the biggest week of the year of the earnings season as far as like the overall amount of market cap that gets reported. But most of the companies that I think are more interesting are actually going to be coming out next week when you have those other bigger Mag 7 companies that are going to be reporting. And then shortly after that, the blackout window for buybacks for a lot of those companies will evaporate also. So it's more to me on how these earnings reports impact the overall market. And what we've seen so far, even though we're just in the infancy of this earnings season, we had the financials come out, the bank reports I thought were phenomenal. But the really interesting ones, just in so far as how they affected the market, are a little bit maybe ASML, but more Taiwan Semiconductors and Netflix. Because that Taiwan Semiconductors report that came out a couple of days ago was fantastic. And it, in my opinion, should have caused the entire market to be able to break out. If you rewind a little bit beyond that, and let me share my screen real quick if we can.
Yeah,
Greta.
I can pull it up. Yep.
Cool. So if we rewind, I got this chart of the Qs up right here. You had this ASML day where they reported earnings early and they weren't good and they destroyed the whole market really that day. But they wrecked these semiconductor names also. If you look at this SMH ETF back here on October 15th, and the Qs got smoked as well on October 15th. I call this a negative Maribozu engulfing candle, day to take notice of, kind of talk about it in a few different ways. But the bottom line is that this is a very important candle. It represents that sellers are out there, but it didn't actually break our uptrend. So the uptrend of this market and the broader bullish technicals are still in place. But this candle that came in on that ASML report is what I kind of consider to be more of like a warning sign. It doesn't necessarily mean that the trend is going to break, but it's something to pay attention to until and unless the candle gets negated. It gets negated by the price action getting above it. So the October 15th high, I think, is very important right now for the NASDAQ, which is it's a 498.50 for the Qs. So why was this, if we want to assign reasons behind every movement, which, sometimes the reason is simply just a matter of positioning. But if we want to assign reasons behind every movement, this is because of ASML. Well, then, 2 trading sessions later, we have TSM report. And you could argue that Taiwan Semiconductors is actually significantly more important than ASML. I am not an expert on the semiconductor space at all. I like to joke, I don't know the difference between a computer chip and a potato chip, except one I can eat and the other I can't. But ASML, I know, just like produces the parts that make the chips. It's not necessarily as important as Taiwan Semiconductors and the read through of Taiwan Semiconductors to the most important company in the universe right now, which is NVIDIA. And Taiwan Semiconductors, the CEO, came out that day and said, we are seeing tremendously strong demand still from our largest customers. And again, the read through on that is that NVIDIA still has a lot of demand. And NVIDIA is still also trading really well, but the semiconductor ETF itself has not recovered off of that day, and the Qs have not recovered off that day. When in theory, this TSM is so important, and NVIDIA is also working its way higher. It's making new highs again today, that these Qs should have been able to just really already break out and negate this October 15th candle. Yet instead, on that Taiwan Semiconductors day, almost the same thing happened as on the 15th, but in a smaller way. We gapped up because of Taiwan Semiconductors, and we closed on lows. So I kind of have these like 2 warning candles in a row. It's not necessarily like a signal that you should be going, max short on or anything like that, because like I said, the uptrend and the medium picture bullish technicals are still in place. But I can't help but scratch my head and be like, is it TSM and now Netflix on Friday as well? Are they like furthering the warning signal that this market's not able to rip higher off these earnings? Or are they the only reason right now why the Qs haven't actually already broken down further off these kind of warning signals that came out? So the biggest thing for me for earnings right now, I'm very, very focused on the big picture of these technicals to see if there is a chance that we break lower, particularly between the period of time starting right now, because we just had options expiration last week. So when options expiration happens, it rolls off a lot of the market's gamma. It can create a little bit of a loosening effect for the market. Between options expiration on Friday of last week, kind of through this end of the month period, through the election period, if there is going to be an opportunity for this market to actually follow through to the downside and, give some follow through off these warning signals that I'm seeing, and they're not the only warning signals, by the way. The other warning signal is the VIX itself, still trading between $19 and $21 with the market at all-time highs. Another warning signal is how the TLT is getting absolutely clobbered again this morning. Interest rates are moving higher, yet this market somehow is continuing to hold up. Though obviously it's giving a pretty nasty read-through for the Russell today, for the people who really wanted the rotation in the small caps and the medium caps to continue. So, that's kind of a long-winded answer to the question of what is the most important earnings report for this week. I don't know. It's more of a bigger picture thought process for me on, like I kind of just explained, the read-through on Taiwan Semiconductors and Netflix, how that's impacting the broader market with just the rest of the reports as they continue to come out really over the course of the next 2 weeks, at a time that I think is just really, really important for companies to continue to beat to kind of hold up this market.
When it comes to that Taiwan Semiconductor report, most other traders say no questions, we'll get a big beat and raise quarter from NVIDIA based on what we saw from Taiwan Semiconductor. Looking at the NVIDIA chart, saying, the stock is just trudging higher each day. We're still a month away from the earnings report, but of course the setup into earnings is so much on where is the stock pre the print, etc. What are you focused on for the NVIDIA chart and the setup pre-earnings, as we are still a month out based on, that Taiwan Semiconductor number that we got.
Sure. So the NVIDIA earnings report is almost annoying because it's like the last company that reports earnings
so
in the
late.
entire earnings season. Like earnings season is basically over. Then NVIDIA's like, okay, we're going to just report a couple weeks after everybody else.
The date.
So, and that'll be an interesting period because then you're already going into a time of trading that is potentially much more bullish, just in terms of forced flows in
we're
that period of time.
Too.
Right. So you're through the election, which traditionally every time I've been trading an election, we get big boosts after the election, really regardless of who wins. Doesn't seem to matter who wins. We get kind of a big boost off of that. We already know that the reason why the VIX has been so high is because so many people have tried to hedge downside risk of these outcomes, and then those hedges are going to have to be rolled off as well, which could potentially have a further bullish effect on the market. Plus the corporate buyback window the blackout window is not only over, but November becomes the strongest part of the year for that. So NVIDIA reports at a time that I think is very different insofar as how it affects the market, as Apple, Microsoft, and Meta are going to be reporting, and that's not an exclusive list. There's more that are going to be reporting still within the month of October. But broadly, these NVIDIA technicals look beautiful. Breaking out into all-time highs again. I still somehow have been managing to have a short on an NVIDIA that is nicely in the money because I keep day trading around it. I took some good day trade short in NVIDIA today. The best trade I actually had was at like 1030, 1035 as this broke this pattern down on the intraday, where I kind of day traded to the short side and did pretty well for myself. So it's enabled me to kind of stay in a small short. But if we close above where it's trading right now today, I probably have to stop myself out of that little swing that I have. But to more directly answer your question, I always like to see where a stock is trading into its earnings report to get kind of a feel for how well they will need to perform on that report. And it's like you just said, the Taiwan Semiconductor report and the read through to NVIDIA, in combination with the fact that NVIDIA is trading at highs, this is probably going to be an earnings report where coming in line on the earnings report is not going to cut it. I would be willing to bet that if NVIDIA's earnings were tomorrow and they reported all inline numbers across the board, that the stock would get smoked on it. Yet NVIDIA has not been reporting inline numbers. They have been absolutely crushing it so consistently that it'll be an interesting one, because an inline report's not going to be good enough. I bet even a good report that beats by a little bit is not going to be good enough. They're going to have to absolutely crush it, and they have a reputation for doing that right now, and we'll see what happens.
The dynamic of NVIDIA, like you mentioned, is these huge beats and then these huge revenue guidance increases, et cetera. Eventually that has to, slow down because normalization happens, and, AI is the future and is the story for the market right now. But, things catch up over time, and we're not comparing year over year of these huge increases that we've been seeing with NVIDIA. How does that change the dynamic of the stock moving forward?
Sure. So it's already even happened to some degree. Is that the growth projections on NVIDIA have slowed down a little bit, yet the stock is able to remain at all-time highs. The way that like PE multiples work is that when you're trading at an expensive PE, the idea is that the market expects you to catch up to the area that it's trading at, right? It's a price earnings multiple. So if it's very high, that multiple is very high. They're expecting the E part of the PE to be able to catch up over time, and that's actually what's been happening in NVIDIA. In some ways, the stock is not trading as expensive as it has in the past, and it's already beginning, I think, to account for the eventuality of a slowdown. You can't continue to have the growth rate that NVIDIA had back in these really, really big gap ups that we saw for this stock, like back here in May 2024 as an example. You can't continue to be able to have that run rate, and the market knows that, and it's already pricing it in. And that's one of the bull arguments, is that this stock is actually trading cheaper than it has at points in the past. So there's room for them to possibly ramp up, but we'll see.
All right, coming into the end of October, we have 10 days left for the month. What are your expectations for the rest of October and into early November?
Yeah, so I'm still very nervous about this market. It has kept me from being as aggressive to the long side as I typically am, which to be honest has probably cost me more money than anything else. But it's also let me sleep at night. It's like I was saying, there's still just like too many warning signals out there for me right now. But if there is going to be a pullback, I do think it needs to happen soon, because once we get through the election, and assuming that the election goes smoothly, everything looks like full steam ahead for the market at that point. So it's just a matter of if these warning signals from the technicals I just discussed, the warning signals from bonds I just discussed, or the warning signals from the VIX that I discussed can actually lead to some sort of bigger liquidation in this market. And it hasn't been able to do so. And I think that part of the reason is because of the sell-offs that we actually had in August and September. It caused a lot of market participants to be a little bit more risk averse and to hedge more, which perversely has the effect on the market of making it even easier for it to actually push higher, because a lot of funds are under invested, and then when the market breaks out, they have to come in and they have to chase price because they're not keeping up with the S&P. So we'll see if we can get this pullback or not. I'm still keeping an eye out for it, but I'm also respecting the technicals. So if I see that the Qs are really able to start getting above and closing above that October 15th high that I keep talking about, to some degree with the SPYs as well, if they can get above 585, how can you possibly be bearish? You can't. The technicals are the most important thing, and at that point they'd be full steam bullish. So we'll see. We'll see how it trades out.
All right, Derrick, I want to let you get back to trading. So for everyone who is with us live, if you would like to get Derrick's free ebook, you can go to t3live.com/DOLive. It's about prop trading, and the benefits of prop trading is, again, Derrick is a professional prop trader with T3 Trading Group and runs a room with T3 Live. All right, so Derrick, have a great rest of your day. We'll be back here in a week to talk about an exciting earnings week coming up for sure next week. So good luck with Tesla this week. And have
Thanks,
a
Greta.
rest of your day.